Mr. Mohan Joshi, the Executive Director, Commercial Steel Strips Wheels, joining us on the show. Mohan, hi, good to be speaking with you. Just wanted to begin by discussing the latest, wheel supply arrangement that you have done with the passenger OEM. Talk to us a bit more about that. What kind of revenue potential do you envisage? When does it scale up? What kind of margins does it bring on board?
Thanks a lot for having me. So the first year revenue accretion will start happening from Q4 of this financial year. Program is for maybe another 2 years, and then the refresh program will be up. And we feel that potentially the intent is not to get over this program. This is the largest OEM of the country, and they have a potential, consumption of close to 1,500 odd crores, and we were zero there for past 7 years. So it opens up a market share potential of 20-25% over 3-4 years. And we feel that after 2 years, we are targeting a 20% market share with this OEM.
Point taken. So given that you are making this foray with a new supplier, is it that you are giving up the margins just to have that relationship? Just wanted to understand, how does it work out, and what kind of scale up do you expect?
So I don't think so there's a scale down in terms of the margin. It's a pretty decent double-digit margins with this customer as well, in line with the existing customers. And we feel that with the customers that we had already on board, there was a technology difference, and that's why it took almost 4 or 5 years for us to get into this. And we feel this entry in, earmarks a good trajectory, the way that we are handling close to 60 to 70% of the business with other customers. We believe that our capabilities and management will ensure the share of business with the same customers in the similar lines.
Talk to us about what kind of demand visibility you have right now, both from your domestic clients as well as overseas clients.
So I think on the volume front, we expect this volume growth to be between 6 to 7% for financial year 24-25. And exports could be a little tricky going the way that it is happening right now. So no certainty for beyond 4 months, 5 months. And it looks like the exports are going to be flattish this year, given the turmoil which is happening in the European and the American side. Domestic side, tractor is going to be good for us, close to a double-digit growth for us. On the CV side, we feel that we are going to be around about flattish for this financial year, despite the industry indicating that we're going to be down by 5 to 6%. On the PV side, we expect us to be at close to 5% growth. And on the alloy wheel side, we feel that we are going to get 10 to 15% growth for financial year 24-25.
You're also witnessing a very sharp as far as the base metal prices are concerned. Is it a complete pass-through for you, or you have to absorb some of that?
No, for our business, it's a complete pass-through, and the risk from the raw materials is hardly anything for us.
Yeah, but Mohan, given the fact you talked about that exports are likely to be flat, and if I have it almost 3/4 of your business comes from export in terms of revenue, 70% thereabouts. Would that mean that the company's growth itself will be a bit stalled this year?
No, so export is about 8% of our organization total revenue. And we feel that next year it is going to be around about 10% odd. And the product mix is going to be favorable for margin accretion in 24-25. With the alloy wheel exports, we are targeting close to a 70% growth in that sector.
It's just 8%. You're seeing that it is likely to go up to 10%. I just wanted to get a sense from you in terms of the EV segment as well. I'm guessing the product won't change much, whether it's an EV car or a, car. But in terms of providing those services to the EV companies as well, what are you doing there? And in terms of the capacity utilization and capex line, what are the plans?
So on the wheel side, I think it's EV agnostic, so we don't have a real risk there. But EV ensures that the alloy penetration continues to move higher, and we are really very ready for that. And currently, close to 50% of the EV wheels which are being populated in the country are being supplied by us. And we feel in 24-25, there are multiple EV programs which are launching with single source from our side will be an impetus organization. And going forward in terms of the other side of capex, I think expansion of our knuckles capacity, which is a new business that we have added, will take us mainstream. And next year, financial capex will be around about 200 to 25 crores.
There was a process which was there in terms of releasing the pledge as well. Could you talk to us about what's the situation there? How much of the pledge shares have been brought down to?
So now the pledge is almost zero. It happened, I think, last quarter, and we've already released, a press release for that. Currently, the pledge for the promoters is zero.
Again, thanks so much, Mohan, for making time and speaking to us. So that's the verdict coming in that the volume growth is to be 67% in various segments. Exports is something which is expected to jump from 8% of revenue share to 10%, but a bit flat given the kind of macro environment and geopoliticals that's shaping up. Time now to slip into very short break, but don't go anywhere. The market seems to be recovering a bit. We'll track when we come back. Okay, 22,300 thereabouts is where the index is at.